Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Now in this particular video, I am going to be showing you a strategy that combines the Bollinger Bands, the MACD and the RSI indicators. Okay, so I'm just going to be breaking down the combination of these three indicators and how to use them together. All right, so you might want to stay to the end of this video so that you do not miss out on any detail at all. First of all, let us talk about the Bollinger Bands. All right, so this is the Bollinger Bands. It is developed by John Bollinger. This indicator consists of three lines: the moving average in the middle, and the upper Bollinger Band, the upper band, and the lower band. Okay, now it's important for you to note that the moving average in the middle is set to a specific period, which you can modify here, while the upper band and the lower band are usually two standard deviations. As you can see, two deviations from the moving average in the middle. You can also modify that value here in the settings. Okay, so when the price is near the upper band, it indicates an overbought condition, and when the price is near the lower band, it could mean that the market is oversold. So the bands also tighten during periods of low volatility, as we can see in this situation here. On the other hand, when we have a high volatility, the Bollinger Bands usually widen apart, like what we had around here. Okay, so this is a key feature that we're going to be using our strategy, so keep that in mind. Next up is the MACD, or the moving average convergence divergence. All right, now the MACD is a momentum indicator that shows the relationship between two moving averages of a security's price. Now, as we can see, the MACD is made up of this MACD line, and it's also had the histogram bars and the zero line. Okay, so when the MACD line crosses above the zero line, it's considered a bullish signal. For example, as we had here, right? This is a bullish signal. When it crosses below, you have a bearish signal. Okay, and then the histogram helps us to visualize the strength of these movements. Okay, so when you have an increasing histogram bars, when the histogram bars are increasing in length, it shows a strong bullish momentum when it is above the zero line. When it is increasing in length below the zero line, it shows a strong bearish momentum. Okay, now we also have RSI, or the relative strength index. All right, now this indicator, the RSI indicator, it measures the speed and change of price movements, showing whether a currency pair is overbought or oversold. Okay, so the RSI ranges from 0 to 100, with levels above 70 indicating overbought conditions and levels below 30 indicating oversold conditions. Now, what makes the RSI so useful is that it can confirm signals from other indicators, helping you avoid false entries or exits. All right, so how do we combine these three indicators into a strategy? So here is the step-by-step process. First of all, you have to set up your chart with the Bollinger Bands, the MACD, and the RSI. So most trading platforms like TradingView or MetaTrader 4 have these indicators readily available. Then secondly, you have to look for Bollinger Band squeezes. Okay, this occurs when the bands tighten. All right, signaling low volatility and the potential for a breakout. Okay, so identify those periods of Bollinger Band squeezes. Then thirdly, use the MACD to confirm momentum direction. So if the MACD line is above the zero line and the histogram is above the zero as well, positive, it suggests bullish momentum. If the reverse is true, meaning when the MACD line is below the zero line and histogram bars are below the zero line as well, it suggests bearish momentum. Then the next thing for you to do is to check the RSI for overbought or oversold conditions. For a buy signal, you'll want the RSI to be below 30 and starting to rise. Okay, then for a sell signal, you'll want the RSI to be above 70 and starting to drop. Okay, then now you have to combine all these three signals for confirmation. For example, if you have the price of the asset breaking out of the Bollinger Band squeeze, for example, we can see that we had a period of consolidation around here. We had some Bollinger Band squeeze around here, right? We had this whole, in fact, this whole period was, we had some degree of low volatility, and then finally we can see that we had a breakout here. We had a breakout. This was still a period of low volatility, but then we finally had a breakout from this low volatility around here. Okay, so when you have the price breaks out of the Bollinger Band squeeze, and then for example, breaks out below, then you confirm a decreasing histogram bar on the MACD and the MACD line pointing downwards. All right, and then you look at the RSI and ensure that RSI is also falling from the overbought territory and pointing downwards. Then you have a confirmation. Okay, in the case of a buy, when you notice, for example, a breakout from, like what happened here, a breakout from the Bollinger Band squeeze. This one now is a buy example. So we can see a breakout from the Bollinger Band squeeze, and then right about when the breakout happened, we can see that the histogram, the MACD, the histogram bars of the MACD are already above the zero line. The MACD line is also pointing upwards above the zero line, and we can see that the RSI also was already moving upwards, trending upwards, although now it has entered the overbought territory. So we had a confirmation for a buy right around here. So we'd have considered entering a buy and then set our stop loss below the swing low, or just after, if you want a tight stop loss, just below the breakout point, and then take profits. You can use the nearest resistance zone. Okay, so that is it. The reverse is the case for a sell. Okay, now before you start applying this strategy, remember that no system is foolproof. Okay, always practice on a demo account and use proper risk management. Combine these indicators with other tools like support and resistance levels for even more accuracy. Okay, I usually like to emphasize on the importance of making use of support and resistance zones. They are very, very important. Okay, on your chart, make use of them. These levels are going to give you potential reversal points. They're going to give you entry and exit points. And one great thing about support and resistance levels is that they continue indefinitely. As price is moving forward, these levels still hold. All right, so they continue indefinitely. They are very, very important levels on your chart. So if you found this strategy helpful, remember that no system is foolproof. Please, I have to emphasize that. Okay, I have to emphasize so that you will know that no strategy guarantees profit. So that is the reason why even when you are trading, you shouldn't risk more than 2% of your account in one trade, and you shouldn't use poor risk to reward ratios. Okay, I recommend a risk to reward ratio of 1 to 2 minimum. So if you're risking $1, you should be targeting a profit of $2 minimum. All right, so if you found this strategy helpful, make sure to give this video a thumbs up to support the channel. Okay, and if you are new here, don't forget to hit the subscribe button and turn on the notification bell so you never miss out on future content. Thank you for watching, and I'll see you in the next video. Until then, happy trading.